Uh, Happy Friday to everybody. I'm off today. It's my off Friday, so it's pretty sick. Doing a quick check on the stocks today. Good day to be a Zim investor. Again, like we're up $1.22 right off the bat. Things fluctuate, so no big deal. But pretty sweet because now, just where it's sitting at right now, down $200, and we still took that huge dividend. So that's pretty sick. And mostly everything else so far today, markets, not been open long, but they're mostly red. What am I looking at? Last price change. So pretty much everything in my portfolio is red except Zim, which is taken off great today. Hopefully it keeps that momentum and it closes out the trading day very well, because that'll look really, really good over the weekend, and it's going to get a lot of attention for people come Monday maybe. But I don't know. I'm not that great at stuff like that. On another note, I did start looking into some more companies and whatnot. What did I do? Okay, I'll close that. I pulled one of these up. So let me go ahead and bring this up for y'all real quick, if it'll let me not block my thing. All right. So this is just real quick. This is just what Zim is doing today. Pretty cool. It is going straight, to the moon, as they say. I love it. That's awesome. But I did do some more reading. I spent probably about 2 hours just reading a bunch of random articles. I'm not going to go over every single one of them because that would be quite boring. But I've been reading about PBR because that was the one that I was talking about, that really good dividend down here, and whatnot. And it's just another big income play, right? So it's all petroleum based, so forth like that. It is out of Brazil, so you are getting taxed. Brazil, which is, I looked this up, I'll pull it up real quick. It is a 20% tax for a day trade and a 15%, for long term or probably dividends, etc. that you're getting taxed. But you're also going to get taxed for your U.S. Fed bracket is what I meant, not state. I noticed I've been getting that wrong. But that's something I've been looking at, and I know it's state-owned. It's influenced by the state. The biggest things I have seen in the article about PBR is mostly that they get criticism from the government down there about the prices of the fuel. So they wanted to support the Brazilian economy because it's like one of the biggest producers, if not the biggest producer. I forgot exactly what I read of petroleum and fuel stuff like that in Brazil, and I'm betting that this $73 billion market cap gives that away. So this is something that I've thought about in the past. I do have a few positions in this, in particular stock itself, that I was building up on. You could see right here, PBR, 31 shares, so not a lot. But it was something I was looking at. But I also had a few other things that caught my eye that, kind of pulled my attention away. But because of the high dividend yield, I wanted to look at it a bit further. But that's like the biggest thing that I pretty much was getting out of PBR. The fuel pricing policy under scrutiny. But they did say, let's see, real quick if I can find it. Right here. This is where it's going to be at. Petrobras has denied receiving any government proposal to change its fuel pricing policy. So, from what I can understand, and I read quite a bit here about different websites and so forth, is people were saying like if the government made them lower their fuel prices, then that would affect their revenue, right? So, less money, less earnings per share. It's going to get people to be like, okay, less money, less dividend, and they're going to jump out of it, so forth, like hedge funds, computer-generated stock trading for big stuff like that. That's kind of where my mind went. But again, this is all just me making the best out of it because, I'm not a professional at any of this. But I just try to make the best out of it so that way I can make money and be profitable and be more financially wealthy moving forward in life. But they said that they didn't get that. So they're still sticking with what, the rates that they're holding from what I understand. And yeah, it is influenced by the state, and the presidencies and so forth, but they still have their own, a bit of their own power, and it seems like people are saying, oh, they have no power at all, the government controls it. not necessarily true. They influence it, but they technically still don't force their hand, in a sense, without there being more political stuff to that. Going here, so here's another one, so a lot of folks, they say, even though Zim is shipping, right, and PBR is petroleum, so that's more toward the, fuel side. Here, the argument with Zim is, oh, they don't own their ships and so forth. Okay, well, to me, I see that as a benefit. If I wanted to buy into a company that owns ships, all you got to do is go to Google, type in shipping, trading companies, and then it'll pull up a huge list. And there's a lot of good companies in there. Except Zim, you're getting in, before the train leaves the station. That's the concept. You're not hopping on, another station way down the road when all the other people done got the big reward. You're just picking up the cookie crumbs now, and whatnot. I'm not trying to look for crumbs. I'm trying to look for whole freaking cookies, But here, you can see this one, it says that their assets, what they own. Petroleo, Brasilio, I don't know how to say that. Total assets from 2010 to 2022, and some of them it decreased and some of them it increased, right? But given how big that market cap is, they probably had good reasons for why they decreased it when they did. But you can look at these numbers, I'm not going to read them all off, but they have assets. So for somebody who says I don't want Zim because there's no assets, well, PBR is looking like another pretty good concept with assets. So that's something that I was reading up on because I definitely was like, yeah, I do want to get into it, but I don't know. And I'm going to read more about this company. But, they're into, exploration and stuff like that, which also is pretty good, And even if you don't want to invest in this, with like Coca-Cola money, Johnson & Johnson money, JP Morgan, McDonald's money, all Microsoft, Apple, all the ones that everybody's like, oh, these are the safest investments. They definitely are. And I've been looking at a lot of portfolios out there on YouTube, just browsing a lot of people's. I've been even going back 2 years into their videos and watching them and seeing how they grow and what they've been buying, and whatnot. And that was 2 years ago, just to see what past people were taking. I definitely know that my portfolio is a different route because I'm trying not to really play all the safe blue chip stocks, and whatnot, because I'm trying to get in at extremely good prices, to build that cash flow. Once I get a lot of good money coming in, then I'd be more interested in seeking out things that have an expensive price tag, just for safety, right? But right now I'm playing big and I'm trying to target good companies to pay me huge. Zim is one of them that has done pretty well for me so far, and I'm really happy about that. But yeah, so there's that. And then I looked into this one here. So for those of you who don't want as much risk, right, but you still want a nice dividend. So this is when I was checking out. It's a EC ticker symbol, New York City Stock Exchange. Ecopetrol SA, again, Brazilian petroleum. And it tells you all down here. If you type it into Google like I did, you can pick up the Wikipedia and read into it and all that stuff. So again, like this is pretty sweet. You're looking at a pretty solid market cap there. PE ratio 3.2, not bad. And then you're looking at a 14% dividend yield. And this applies with the same taxes that the other one did. It's 20% on a day trade, 15% for anything else, and your U.S. taxes. So that's another thing that I look at. So if you think 13.95 minus the 15% you automatically lose, you're looking at, I don't even know if this is an accurate way of doing this, but I would assume that the dividend yield is somewhere around 11.85, right? And then you got to pay federal taxes here in the U.S. on that. To me, still not bad. So this is more of a play for somebody who doesn't want to take the risk like what Zim has or the risk of what PBR has. But I'm probably going to play both of those. And I'm still going to be focusing on building up my holiday positions. That way, ideally, I cash out toward the end of the year. So this is something I'm looking at that I thought was pretty sick. And you look over here, they have already, from what I understand, they have already vowed to pay a dividend. So these are 2023 ex-dividend dates. You got April, right? So we're in April. Then you got September, and you're going into December. There's your record dates, pay dates. So you already know you're going to get paid. They have already said we are going to make this payment, right, for 2023. So you're looking at about these prices here. So 82 cents, so forth. But this is what this website is. So each website's a little bit different, I've kind of noticed. But it just getting a general idea, right? So, and this one's other, so I'm guessing that just means a bonus payout. You know, same thing. There might be people in this company, I don't know for sure when it comes to EC, but might get part of their check off of payouts from the shares they hold. That's possible. Not 100%. I haven't looked into that. Just thought it just came into my head. Okay, and then we go over here, and this is the other one I was looking at. You know, and then you see these are a little bit different. You got 82, 14, 82. You know, the ex-dividend date, all saying April 25th. Record dates, payment dates. You know, so this one's saying payment dates to be in May. You know, so they're all a little bit different. You know, so I'm not quite sure, but we know that there's going to be some payouts on this, right? You know, so I'm thinking like that's pretty cool. You know, and as I said before, you're getting in, you know, less risk. You know, for people that don't like, you know, the risk that comes with the other stuff. You know, but when you look at those dividends, you look at Coca-Cola stock, which is like the king of all, you know, stocks when it comes to safety and so forth. 46 cents, you know, quarterly. Right, so you're paying $63. Obviously, most of that payment that you're paying for that company is because of the safety that it offers and the fact that no matter what, Coca-Cola is always going to go up because it's just going to simply increase the price of Coke as inflation increases, right? You know, so this is just incredibly good. We all know that. But when you compare something, you know, like a EC company that I showed you with that dividend, a lot more safer play versus if you look up PBR, you might miss a dividend or two, right? They might not pay something, you know, but that's simply just a high dividend yield area. So you would take that dividend, divide it by 2 to make up what you didn't get paid if they only paid you like 3 times a year instead of 4. You know, so you guys got to run the numbers in your mind, look at the way you want, and make your own best judgment. But yeah, with EC, you know, with what it's showing out they're paying, let's say about 80 cents for the price you're getting in. It's still really, really good. But like you said, you're still minusing your 15%. So let's just say, we'll say 75 cents, right? You know, just for a number. And we minus the 15%, that's going to automatically get taken out. You're still looking at a 63 to 64 cent dividend if you got paid that price, you know, that time. You know, is it going to pay quarterly all the time? I don't know. You know, I mean, that's one of those risks. But even if it doesn't, look how much more dividend you're getting versus how Coke pays 46 cents. So even if they miss one, you're still getting, you know, for your bucks, 17, 18 cents more per share when they did pay the dividend. You know, so that's kind of a way to look at it as well. At least that's how I've been kind of looking at it. But yeah, so that's the stock that I wanted to share, that I was exploring a bunch of different stuff. It's just the EC. I'll go back to it real quick. I think that here, this could be a safer bet, you know, for somebody who doesn't want to put the risk into, like I said, PBR and ZIM, and you still get a nice dividend. And especially if you're not into the petroleum sector, any of that yet, you know, you're still looking pretty good, I think. So, just wanted to share that. This is something that I'll probably end up checking out and getting into as well over time. I have several stocks now in my portfolio, as y'all seen, that I'm going to be building on. I'm not really going to look for much else right now. So this had to have like taken a turn down by this point, right? Yeah, so there's a little dip. You know, the morning dip. But yeah, so here's where I'm sitting at. I have not added an EC share yet, but I will. That way it's on here to look at. And these are the companies that I like, you know, for where I'm at. So I'm just probably going to focus on dollar cost averaging some down, so that way where I am sitting at my total gain, total loss, I can get these numbers to be in the green. And I think they're pretty solid companies. A lot of them, I do like them. So there's a few things here in the red. Like AGNC is pretty red. Like a dollar cost average on these with a company that I do like, and it puts me closer to the green with my total gain and my total, percentage and so forth. That way, if I do need to exit out of some stuff, for personal life reasons like bills, whatever, I can, even though I don't want to. But those are going to be what I'm going to be building on, and I'm probably not really going to look for many other stocks unless like something the market just turns insane. Like the market just goes way down, and then like blue chips start dropping. Obviously, you're going to take advantage of that because blue chips always go up, and they go up faster than other stuff. So I keep an eye on that. Other things I'm doing, got some of my cars, duplicates and whatnot that I'm selling. This in particular car here, I'm fixing to go ship it out. I got paid $285 for it. It's probably going to cost me about $6.50 to ship it. So I got $280 back on that. So that's pretty cool. Some other like super treasure hunt cars in my car collection that I'm going to be selling. Most of my super treasure hunts and whatnot. At least ones I don't want, because I can get those back pretty quickly. That way I can start knocking down some of the debts and so forth that I shared in a few videos back. But this one was talking about EC and a little bit more research I've done with PBR and where I'm looking at getting in with that one and so forth and weighing it out. Like I said, if I don't get quarterly dividends, and you only get like 2 dividends, but those 2 dividends are big, then I'll still do it because I keep with other companies. That way I keep getting revenue, right? But if you don't have a job and you're living off of it, I can understand wanting to have monthly paychecks or quarterly paychecks. So it's really just for your own personal, how quickly you want to have the money in your account. If you're willing to wait to get a bigger paycheck in the end, it's probably a good one to look into. But yeah, so I got those going, and about it. I'm going to start knocking down some of my debts and whatnot and start building up these positions. I'll add EC to this, and that's what I'm going to be focused on. So most of what I put into here, though, is going to be the dividends being reimbursed. And then most of my finance money from paychecks and so forth is probably just going to be going toward bills and other things I got to do with the new property and whatnot. So just wanted to give you a quick share, see what y'all thought about, EC and the PBR. Said you got risk, EC has less of it. Other than that, I'm going to go mail some stuff out. That's what I gotta do. Gotta go get a registration sticker done for the girlfriend. Haircut, get cleaned up. But anyway, I hope that y'all have a fantastic Friday and that y'all's portfolios are again blossoming, going super green. And if y'all have any cool stocks or anything that you want to share, please do. I'd love to check them out because I'm always looking for good opportunities to also diversify. My portfolio is not too diversified, as y'all know. It's got the REITs and a few things, but a lot of REITs and I said that, and then banks and so forth. So can always do some diversification, but I want to get in, at the launch. Kind of like when you launch a ship. I want to get in on board at the launch, not, buy a room later down the road where I'm not getting the max benefit, even though, I will eventually. When the opportunity presents itself and I just have a lot of good cash, then I'll start buying. Something like Coke maybe, because Coke's always going to do good. So it's a good way to keep your portfolio from, going to the pooper or trash can. But anyway, I hope you all have a great day, and I hope you all enjoy this, and I hope those petroleum companies, which are inexpensive to get into compared to Chevron and Shell and all the other ones, but hopefully it's something that might catch your eye, whatnot. So again, y'all have a good one. I will see you in the next video. Peace.